Welcome back to another video. Today we have none other than Steve Penny. He is our regular market analyst, researcher, and update every single Friday on your investments, on the economic and financial systems, on precious metals, gold, silver, mining stocks, uranium. And this happens every Friday to deliver the most value that we possibly can to you. So if you enjoy this and you like having Steve on, give us a comment right there down below and let us know that you enjoyed this. Give us a comment down below. Hit the like button right over there and right over there. That's the other way you can let us know that you enjoy this. And last but not least, be sure to support Steve's work. Right there down below is the free newsletter called Silver Chartist. The reason I had Steve on is because I went through the free newsletter and I was blown away. I said, Steve, this is better than most people's paid newsletter. This free alone is going to be worth a lot of money to folks. And I said, can you come on and do a regular market update for us? And so that's what we're going to be discussing here in this video. And I want to encourage you to sign up for free to Silver Chartist in the description and pinned to the comments right there down below. That's Steve's newsletter.
All right, guys, Steve Penny here. Today is Friday, June 18th, 2021, with another guest post and market update on Jake's I Love Prosperity channel. Of course, we're talking here just a couple days after the most recent FOMC meeting where the Fed indicated that they may consider starting to raise nominal interest rates towards the end of 2023, about 18 months from now. And that's been reason enough for these high-frequency trading algorithms that drive these markets to dump gold, dump silver. We saw gold down almost $100 yesterday, and silver was down almost 7%. And what I found after 13 years of studying these markets is that in these type of moments where there's panic, where there's a lot of emotion, to me it's best to tune out most of the noise and just focus on the charts and trying to identify some support levels where we may begin to see things start to curl back up. I like to say we deal in probabilities, not predictions. And I like to focus on having a strategy to handle a variety of different outcomes, regardless of the next short-term price move. So let's go ahead and pull up some charts. All right, so we'll start off by taking a brief look at a daily chart for the US dollar dating back to March of 2020. And what jumps out right away is this series of lower highs and lower lows going back well over a year. So the dollar is clearly in a downtrend by any metric. However, when you look at this short-term arc pattern right here, you could make a case that the dollar is trying to reverse. Now, I don't think we're going to enter some kind of long-term uptrend in the dollar, but this short-term pattern here is worth monitoring. Now, when we come up and look at the RSI, which measures whether something is overbought or oversold, we see that the dollar is the most technically stretched or overbought that it's been in well over a year. So we're certainly due for a pullback in the dollar, and that would likely coincide with a bounce in the metals and the commodities sector. But the big test with the dollar is going to be when we backtest the lower boundary of this arc pattern that you can see right here. If that fails, then we've got support down here at 89.53, 89.21, and then the 2018 low of 88.25. I think once that 2018 low is cleared to the downside, the downtrend in the dollar could really accelerate. But in the meantime, let's watch this short-term arc pattern right here. Now, when we zoom out to a 2-year chart on the price of gold, what we see is that we got this very clear high volume breakout a couple months ago. That was extremely bullish. And then as I've been saying, what's common is once you get a big breakout, you typically run a little bit higher, and then you come back and back test what was previous resistance as now support. And that's exactly where we are now. And I kind of mapped out this potential roadmap. And if things played out this way, we would have a nice reverse head and shoulders pattern like we had here, this left shoulder, here's a head, and then this would be the right shoulder if this support holds. Now, is it going to play out exactly like that? No, of course not. But this is just a rough roadmap for kind of my baseline expectations over the next few months. And this brings us back to testing the previous all-time high sometime later this year. And then I think sometime in 2022 is when the trend really accelerates to the upside. Here's just a zoomed-in view of the chart for gold that we just talked about. And this time you can see the support and resistance just with a little bit more clarity. And you see this horizontal support right here, and price is sitting right at that. But we're below this declining 200-day moving average. For those of you who are new, the 200-day moving average, from my perspective, is about the most important indicator that you can put on a chart because it's the most used input to these institutional trading algorithms that drive the markets. And whenever price is trading below a declining 200-day moving average, those algorithms tend to be in a sell the rally mode as opposed to a buy the dip mode. So we really want to get back above this 200-day moving average as soon as possible to preclude any more technical damage on the chart. Silver has actually held up much better than gold in this environment, which is a little bit surprising because typically silver is more volatile, right? You get bigger swings to the upside and bigger swings to the downside. Well, silver is still holding above support and above its 200-day moving average. And I would say we're at a critical juncture right here as we're testing this primary green uptrend line that goes back to the March lows of last year, and we're working our way towards the apex of this triangle pattern. And as I said in the opening comments, I deal in probabilities, not predictions, and I do think it's more likely that this support does hold. It's reinforced, as we can see here on the daily chart, by this 200-day moving average. But anything is possible. Could we fall a little bit lower? Yeah, that's certainly possible. When we look at the RSI, we're getting pretty oversold here, and we're at least due for a bounce. The big resistance levels to watch on silver will be this red downtrend line right here, and then of course getting above this key resistance at $30. Once we get above $30, I think $50 silver comes sooner than many people think. Here's a longer term chart for GDX, which is the Senior Gold Miners ETF, and each candle here represents 1 month, so these are monthly candles. And just like in gold, we got this major breakout from this bull flag pattern, boom, right here. Came up to $40 resistance, and now we're back testing this initial uptrend line, this primary uptrend line as initial support. So just like silver, we're at a critical juncture here on GDX. If this support fails, we could fall just a little bit lower towards this major support zone down here near 32. But just like in silver, I think there's a pretty good chance that this support holds. Here's another ETF I like to track, and this is the Junior Silver Miners ETF. And what we see here is a bullish ascending triangle pattern. And more often than not, these patterns do resolve to the upside. As painful as this might feel right here, this gut-wrenching sell-off we've had this week, we're still holding above support. And I think the path of least resistance is maybe some grinding sideways back and forth here for a couple of months before an eventual upside breakout in SILJ. Now, if this support does fail, which is certainly possible, we've got some key support right down here. You can see every time over the past year or so that this support with this dotted green uptrend line has been tapped. Prices bounced off of there. So I'm personally keeping some dry powder available just in case we pull back this far. When it comes to the junior gold miners, I know a lot of people like to track GDXJ, and I track that one as well. But as far as ETFs to own, I just personally prefer the Sprott Junior Gold Mining ETF, as I think the quality of stocks in the basket are just better than GDXJ. Now, of course, that's not financial advice. I never give financial advice, but just a thought to share with you. And this pattern looks very similar to SILJ, a bullish ascending triangle here. And like I said, more often than not, these patterns tend to resolve to the upside. Now, it could take a couple months. It could go into the fall before we get that upside breakout. Now, here's a long-term chart that I like to track really closely just as kind of a barometer of where we are in the gold bull market. And it's important to know that gold bull markets typically peak at a 1-to-1 ratio with the Dow. So in 1980, the Dow bottomed at 850 and gold peaked at about 850. So there's your 1-to-1 ratio. Well, currently we're at about a 20-to-1 ratio. So if history repeats and we return to that 1-to-1 ratio, that means that gold would outperform the Dow by a factor of roughly 20. And I think that's entirely possible, if not probable. And here's a chart showing that ratio of gold versus the Dow. And what we see forming here is this bullish arc pattern. And right now, price is kind of hovering right along the lower rail of this arc pattern. And I kind of mapped out like a potential roadmap that would see us go to that 1-to-1 ratio sometime around 2026. You can also do the same thing with silver. So right here, we have a chart showing the price of the Dow Jones versus the price of silver. And that ratio typically bottoms at 20-to-1 in gold bull markets, in silver bull markets. And what's really exciting about that is we're currently over 1,000-to-1 on that ratio. So if we return to that 20-to-1 ratio, that means silver would outperform the Dow by a factor of roughly 50 in the coming years. And I think that's entirely plausible, as wild as it may sound. It's just history repeating. So let's take a brief look here at the uranium mining stocks. And I like to show this long-term chart of the price of actual uranium going back to 2007 to show just where we are in this bull market. So I labeled it right here, you are here. And we're currently just over $30. And you can see here back in 2007, we peaked at around $140 in uranium. Now, granted, that was just a really quick spike up there. Very few people were able to time that. But nonetheless, that's price action that occurred on the chart. And we also have resistance here around $95. And the first big resistance in the spot price of uranium is around $45. So we've got a long way to go in this bull market. And as I've said many times on this channel, that spot price is going to have to get to at least $50 as a bare minimum in order to incentivize the new production that's going to be needed to meet the growing demand from all these nuclear reactors that are coming online around the world. So nuclear is a growth industry. However, for the past few weeks here to maybe even a couple months, I've kind of been urging some caution, saying that the mining stocks may have gotten just a little bit ahead of themselves. And I pointed out this bearish rising wedge pattern right here. And then last week, price broke down. And here we are right now testing the primary uptrend line in uranium miners as measured by the URNM ETF. When we zero in on the daily chart for URNM, which by the way is my favorite ETF to track the uranium sector, we see that we're sitting right at this uptrend line that I talked about, but that also coincides right here with this 50-day moving average and this previous resistance, which is now initial support, right here around $64. Now, if this support were to fail, really the next big support, I mean, you've got some little support levels in between, but the big support would be all the way down here at the 200-day moving average. Now, it's probably somewhat unlikely that we pull back that far, but if we did, I would personally view that as a gift. And then in our Silver Chartist report, we are laser focused on silver, uranium, and gold, but we also like to track some other commodities, specifically my two favorite battery metals, which are copper and nickel, and also platinum. And speaking of platinum, as you can see here on this ratio chart measured against gold going back to 1980, platinum is extremely undervalued relative to almost everything, including gold. And I think there's a lot of upside potential here in platinum. And over at the Silver Chartist report, we're exploring ways to gain exposure to this metal, which I think has plenty of upside ahead. Like I said, copper is my favorite battery metal, and I think the long-term bullish fundamentals for copper could not be stronger. As more and more previously third world countries gain access to the electrical grid and more electric vehicles come online and just more electrification in general across the globe, the demand for copper is set to soar in the coming years. And just like uranium, that price is going to have to rise to incentivize the new production. That said, nothing goes straight up, and you can see this almost vertical move that we've had since early 2020, bringing copper to some extremely overbought levels. So this was a caution signal that we put out to our members last month when price poked its head above this previous all-time resistance, leaving behind this wick right here, you can see on that candle, and then price failed. Well, that was our warning signal right there. And now copper is down about 11% just in the first couple weeks of this month, and it could actually fall just a little bit further here before carving out a base and then resuming the uptrend, which is what I do expect. Nickel is my other favorite battery metal, and we see nickel here locked in this clear, almost 2-year uptrend channel, and look where we bounced just a couple of weeks ago, right from the lower rail of this uptrend channel. And what's interesting is that lower rail coincides with a rising 200-day moving average, again highlighting the significance of that 200-day moving average. All right, guys, well, hopefully you found this video helpful. If you'd like to get our free newsletter, you can go to silverchartistpro.com. That goes out every Sunday, and our goal is to provide a ton of value for free. We never spam you or hit you with high-pressure sales tactics, but we do have a premium membership that's currently priced at just $9. I just haven't been able to bring myself to raise the price, although we are going to raise the price very soon here because we're investing heavily into making our service even better. So if you did decide you might want to try out a premium membership, now would be a great time to do that as well. So I look forward to seeing you guys again soon. Have a wonderful weekend, and God bless.
Okay, thank you for watching this video. So if you enjoyed this and you want to see more regular market updates from Steve, from Silver Chartist, be sure to hit the like button on this side right over there and this side right over there, and leave a comment down below and let us know if you enjoy this. If so, we'll keep making more of these. Now, I want you to go to the link in the description in the comments right there down below. That's to sign up to Steve's free newsletter. Like I said, I had him on because it's literally the best free newsletter that I'd ever seen. And I said, Steve, I'd love to have you as a regular market update. And we're going to create the most valuable sector that we can on YouTube to help as many people as possible. And so if you want to take it the next step, learn mining stocks, really the in-depth of what's happening in mining stocks, in gold, in silver, in the overall financial markets, in uranium. If you want to see this all broken down, that's the Silver Chartist newsletter. There's a free link to it right there down below in the description and pinned to the comments right there down below. Last but not least, hey, thank you, Steve, for coming on here today, educating and informing us on what's happening in the world.